2.
Welcome back, everyone, to TurboTax Office Live Hours. I'm Dina, your moderator. Tax season is here in full swing. Net file opened up on Monday, and you're probably getting your tax return ready as we speak. So we're going to jump right to it.
Yes.
Today's topic is a big one for new parents and new mommies. You're probably sleep deprived, changing diapers 24/7, or like me, you're planning to have a baby and you know it's coming on the way.
Know,
so this is really
congratulations.
interesting. Thank you. So you have a ton of tax questions. I know I do. So let's jump right to it. And we have our TurboTax tax expert, Peky Tsang.
Hi, everybody.
So she's going to be with us for the next hour answering your questions. Peky eats, breathes, and
Sometimes sleeps.
yes,
Tax, yes.
tax, especially for the next couple of months.
Yes.
So thank you for joining us.
Oh, my pleasure.
How
One of
are
my
you
favorite
today?
topics today.
Yeah?
Oh, great. Federal budget just came out yesterday. Some
Oh,
little
yeah.
nuggets for new parents.
So it's very exciting today.
Yes, exactly.
I'm looking forward to hearing all about it.
Great.
So tell me, Peky, on a scale of 1 to 10, how overwhelming are taxes compared to having a new baby?
Okay, so I live and breathe tax, so it's my bread and butter. So
Yeah.
clearly this is an easy, newborns are way more stressful for me. I just remember they're so tiny and you don't know, especially
You don't know how to handle them.
Exactly. If it's your first, like everything is new and just everything is so overwhelming and you just have so many questions and you just, so many things to think about.
So taxes is a lot easier.
For me anyways.
So any mommy can do taxes, basically.
Exactly.
Awesome. So everyone, we're going to be live for the next 45 minutes. We'll make sure to get to as many questions as we can, so have them coming in. As always, we'll be giving away a few prizes, so stay tuned, comment, share, and send your questions. And we're going to get started.
Yeah.
So to get started and give you some time to send your questions in, we have a few questions that we've been seeing in our community. So first question, when you were a new mom, what was your biggest financial worry?
Oh,
Diapers.
yes, diapers being one of them. But also how am I going to fund my maternity leave? I mean, I took a whole year off, so I really had to plan around how am I going to survive without a salary? So, I mean, it's not like our expenses suddenly went away just because we had a newborn. In fact, having a newborn just adds on to the expenses. I just remember bottles, diapers, formula, wipes, you name it, all those extra costs that I didn't have before. So how was I going to do this? So we do have maternity leave, and then you can apply for EI payments. But that amount is really small. It doesn't cover for everything. And in fact, it barely covers for what
I'm not
you really
looking
need.
forward to that.
So I think that was one of my biggest worry, and I really had to plan out how I was going to fund, and then had to basically save up beforehand as well. And I was lucky because I had a little bit of top up from work that they would give me, but it wasn't enough. And so yeah, that was one of my biggest worry.
Yeah, for sure. And what advice can you give new mommies or mommies to be?
So when I was preparing for this, I was actually given the advice that to make sure to plan out for the taxes that you may be owing at the end, because even though they do take off some amounts, because most of the time you're straddling 2 years, or now maybe even 3, because if you're taking 18 months off. So that means a portion of that year you're earning an actual salary, you're going back to work, and then the other portion you're not. And so generally they don't deduct enough, and then you're kind of stuck with a big tax bill at the end when you're filing your taxes. So I remember I calculated I was going to owe $8,000 approximately, and it was pretty bang on. So that's something to kind of consider. So basically every payment I received, I made sure, I put some away because I knew I had a big tax bill coming at the end. But you never, how do you know what that number is going to be for you? So that's the biggest question. How do you know?
Is there a way to calculate that?
So the best way to calculate it is to go into our software, especially the online software. You don't have to pay until you file, right? So you can use that as basically your calculator. What you do is enter in what you think you'll be getting from EI, for that year, as well as your salary amount and how much you do that. And then at the end, you'll see how much it's going to be that you'll be owing. And especially because the newborn is a new situation, new tax situation. So you still get some credits, So you may not have the similar tax situation as before. So that's why it's best to use TurboTax online to make sure you calculate. And then that way you can get a pretty accurate gauge as to what that number is going to be.
Yeah, so you'll get an idea. We have a question from Maria Katie. What baby items can I claim? That's a very good one.
Oh, that's very good. Yeah. I get that asked a lot.
What can we claim?
What can you claim? So you can't claim diapers and wipes, unfortunately. Yeah, that's
that's too bad.
Yes, it is too bad. But medical expense is a great one, so that you can claim. So if you're staying at the hospital, if you maybe have, medications, all of those stuff, you'll be able to claim for your medical tax credit. So that's something to keep in mind.
Okay. And I remember something about if your baby has like a milk allergy, right? And they have to have special formula.
Yes, exactly.
That could be something.
Yeah, so that's something as well. Yeah. So anything that's, medically related, then you can claim as a medical expense. So even for yourself, if you have any medical expense that you need to spend for that year. Another tip that I would give people is to take a look at your insurance. So let's see what your insurance covers. So if you're at work, maybe give them a call and say, hey, I'm about to give birth. Can you tell me what's covered, what's not covered? And, do I need to, save up a little bit of money in case it doesn't cover my entire hospital stay? Or do I have enough benefits there for a private room, Or do I need to up my benefits so that I can get the private room? And that's something that we did, my husband and I.
Oh, really? Okay. Yeah. So I'm going to do that.
Exactly.
Find out what I can get.
Find out, exactly.
Yeah. We have another question from Roger. Hey, Roger.
Hey, Roger.
I get a pension. Can I still split, income split with my wife?
Oh, okay. So yes, we do. You can split your pension. There are age requirements, and depending on what type of pension you're getting. And so the best is for you to actually use our product to go in and input all those numbers, and it automatically determine which pension are income splittable between you and your spouse.
Okay. Yeah. All right. We have another question as well. Are we getting a RC62 for the child tax benefit for 217?
Okay, so it used to be that we get UCCB, and that was taxable, so you had to include that into your income tax return. But we've since replaced that with the Canada Child Benefit, and the Canada Child Benefit is not taxable. So you don't need to include this amount into your tax return. So you're not going to be receiving a slip. However, I would like to caveat, maybe something happened and then you didn't claim your UCCB from prior years. So you may still be able to do that, and therefore if they're paying you for UCCB that you missed out on before, then those amounts you will have a RC62. So, and those amounts will need to be included into your income.
Okay. All right. Dan is asking, what are the basic, sorry, 1 second. What are the basic guidelines on inheritance?
Okay. Yeah. So a lot of people confuse the rules between the States and Canada. So in the States, there is an inheritance tax. So that's why people have to keep track of that, and they have to report it. In Canada, there is no inheritance tax. I know it is for once. Yeah. So therefore, you just get everything. It's considered a gift, and that we don't have a gift tax here.
Oh, okay. That's very good. Okay, so I have a question for new parents. So new parents, some of them obviously are the busiest people around.
Yes, for sure.
What are some ways that they can save time when it comes to taxes?
Oh, for sure, get Autofill. I love Autofill. So basically, Autofill is a function within our product that we go and download all of your slip information into your return, so you don't have to type everything in. Everything is just, it downloads it and puts it into the right place, and then you just need to review it. You'll still need to put in your medical receipts or your donations, because those aren't within the CRA database, but I'm talking about all your T-slips, anything related to your RSPs, all those information can be downloaded from the CRA's website. So Autofill will be your best time saver. And on top of that, and this is what I tell people all the time, I made the big one boo-boo, in typing in those slips in. So from a 6 to a 7, and it made a big difference in my return. And then I got reassessed afterwards because, it was, so autofill, it saves you from making those mistakes. And those happens all the time, especially if you're a new parent, lacking sleep, it's a common mistake that I see.
How quick can you actually finish your tax return with autofill?
Oh, I can, if you're relatively straightforward return, you can probably do it in 10 minutes, really.
Oh, wow.
Yeah, I've done it in 10 minutes.
10 minutes?
Yeah, in 10 minutes. Awesome. And I've taught people to do it, and I've seen them, like maximum 15. Like I said, if you're very straightforward, everything is on your T-slips, and just have some RSP, maybe a little bit of donations, 10-15 minutes.
So what are some of the big federal changes that one should keep in mind when filing for this year?
Okay, so for this year, one thing that they've eliminated is the fitness credits and the arts credits. So you can no longer claim those receipts on the federal level. There are still some provinces that have it, such as Manitoba, Yukon, I think Quebec, BC, for example. So on the provincial level, for those provinces, you can still claim those amounts, but federally, those have been eliminated.
Okay, that's good to know.
I do want to say though, I mean, a lot of parents are kind of, oh no, I can't have those anymore, but we still can claim childcare expenses. So
what do you mean?
So those are daycare, for example, you can still claim for those. Yeah,
okay,
so
but
that's
not
still around.
for like fitness, sports,
exactly,
or classes. You can't claim for those,
exactly.
Right? Okay, all right. So is there anything replacing these credits?
No, unfortunately not. However, I would like to say, if you do enroll your child for daycare or childcare purposes, and a lot of them actually provide those activities as well. So in those cases, you can claim those receipts as childcare. So the function has to be because of childcare and because you need that childcare so that you can go to school or go to work. So what I say to people, if those are really important to you, then make sure you find a place for your child that offer those activity, but also provide the childcare that you need.
And what about RSPs? Can you talk to us about RSPs?
RSPs are okay. So there's RSPs and then the RRSPs and RESPs for the education part.
RESPs.
RESPs, yes.
RESPs. Sorry for that. That was my mistake. So when is the contribution deadline? How much does one contribute? What's the benefit of contributing?
Okay. So one of the biggest, one of the biggest differences between an RESP and an RRSP is that contributions into an RESP is not tax deductible. So you know how when you contribute in your RRSP, you get a receipt and then you can put that into your income tax return and then you lower your tax owing.
Yes.
RESP does not work that way.
So you don't have to claim it or don't have to.
Well, you don't have to report it into your contributions. You don't have to report your contributions into your return. Okay. So because you don't get a tax deduction for it. So it's after tax dollars that you're putting into the RESP. However, there's still benefits of having an RESP. Just because you don't get the tax deduction doesn't mean that you should not have an RESP. The benefits of having an RESP is that while the money is growing inside the RESP, it's not taxed. So it's not like any other investment vehicle where every year you have to report the interest or the dividend. So while the money is growing inside that fund, it's not taxed.
Okay.
And the idea behind it is that so a parent will contribute into an RESP for their child, and then on the way out, when the money comes out, it's taxed, but it will be taxed in the hands of the child. And at that point in time, when your child is going to school, they have a very low income, or if any. So that way, generally, coming out of it is also tax-free, I guess, because they don't meet the income threshold. So there's that benefit. The other thing too is you also get grants from the government. So basically, for every dollar you put in, you get about 20 cents of grants from the government. So basically, if you're putting into RSP, you also get extra money from the government, so that's towards the education of your child.
So for every dollar, they put 20 cents?
Yes, there are maximums. So,
there's maximum.
So let me double check my numbers. So Yes, there's a lifetime contribution limit of $50,000. Okay, so don't over contribute. And also annually, you want to contribute about $2,500 to get the maximum amount of grants.
Okay.
Yeah.
All
So
right.
one of the things that I found out too is that in the first few years, everything is so expensive, right? You have a new baby, you know, you maybe have daycare. So $2,500 is a lot of money.
In a year?
Yeah, exactly.
Yeah.
So, but the great thing about this is just because you missed out on the grants that year, you can catch up later. That is the beauty of this.
Oh, so if you don't put it in that year, you still, you can put more the next year.
Exactly.
Is that it?
And then you still can catch up on the portion of grants that you missed out on. So for example, in my situation, like everybody else, I didn't have $2,500 lying around to just contribute. Everything had to go towards the baby. But the following years, I put in an extra $200-$300 for the amounts that I missed. So then I was able to catch up on the grants that I missed.
Oh, that's good. That's really good. That's really good to know. That's a really good tip.
Yeah.
So then you're saying basically sign up for RESPs as soon as possible. And there's no deadline, or is there a deadline?
There's no deadline.
Because it's not related to filing your taxes. You're not
no, there's
okay.
no. So, but it's just that in terms of grant amounts, you know, there's a yearly maximum grants amount that you can, and you just have to think about it too. You know, don't wait until the last minute to contribute. There's, you know, because already $2,500 is a lot of money. So if you want to double up the next year or the fall, it just adds up. So if you can put away a little bit by little, that's the idea, right? So up to a lifetime of $50,000.
So I remember last year in our last Facebook Live when we talked about the federal budget, you mentioned something about infertility treatments.
Yes,
I think some
great.
of our audience might be interested in learning about that.
So the current government decided that they are going to allow fertility treatments as part of becoming the medical expenses. So in case you needed help to, I don't know, for in vitro or anything related to getting, you know, sperm donors or things like that, or any kind of treatment for fertility purposes, and you can claim that as medical expenses now. The other great thing about it is you can go back 10 years. So in case you never claimed those amounts, you can now go back, and especially if you still have the receipts, if you still have all the information, or maybe call up the clinic to get the information, and then refile your taxes, and then that way you can claim, get a little bit of money back.
That's great.
Yeah.
That's great. So you can go back 10 years, claim your money.
Exactly.
Awesome. Patty's actually asking us a question. Hey, Patty.
Hey, Patty.
I'm also wondering if we have to report the CCB as income, even though it's tax-free.
Okay, so no, the Canada Child Benefit is, as you say, it's tax-free. So that's a great question, because that's the difference between what was offered before. Before it was a UCCB, and the UCCB you get a slip, and you had to report that in your income. So this current government said that no, we're not going to force parents to do that anymore. So it's not going to be taxable. So you don't have to report this amount.
So it's easier for us.
Exactly, easier for us. Now, keep in mind though, the Canada Child Benefit is income tested. So what that means is the amount that you're going to get is based on your income, your family income. So in order for you to keep continuing getting the CCB, you have to make sure you file your taxes.
Okay. So you have to file your taxes to get the CCB, but you don't have to claim anything, and it's not taxable.
Exactly.
Awesome. And how do I sign up for the Canada Child Benefit?
Ooh, so that's a very good one, because so in Ontario, for example, especially relevant to you.
I need to know. Even though it's not my first baby, but I completely forgot. So what do I do?
So in Ontario, they make it really simple.
Yeah.
Basically, when you're applying for the birth certificate, it's what they call a 4-in-1. So when you're applying for the birth certificate, they also give you the social insurance number. They also apply for the GST credit for your child, and also for the CCB.
So now it's one form.
So it's one application. Through the provincial government, and then they'll make sure that everything the CRA is informed. And you have to do it within the first 30 days of your child giving birth. Okay. So for me, I was completely absent-minded,
like most
people. I didn't think, and I didn't know that there was a deadline. But thank goodness CRA actually gave me a call.
Oh, they did.
Yeah, they did, and they asked me, when are you applying? They sent me a letter as well. So I was like, okay.
So they stay on top of it. They keep you on top of it.
bit. But I mean, this is not what I suggest to people. Don't wait.
Don't wait.
So you be more proactive about it, and then go and apply, and just make sure. And depending on which province you're in, the procedure may be slightly different. But there is information on CRA's website as to how you apply, or maybe give them a call. Give them a call before you give birth, so that way you have all the information, and then you're not completely, frazzled like I was.
So we have another question. Can you claim health care premiums paid to insurance company through your employer? Okay,
so that's actually a relatively complicated question.
I'm trying to figure
good
out.
Question.
Yeah.
So best way, actually, because it really depends on the premium that you're talking about, and whether it's part of your salary, whether it's taxable. So what I would suggest is go into our software and plug it in, or also maybe one of our care agents can reach out to you, because it really depends on your situation. Yeah. So I'd be better
to get more information, and that way we can help you individually. Yeah, awesome. Doris is asking, can we still claim sports and arts fees? I wish.
Good question, Doris. But unfortunately, no, that has been eliminated.
Yeah.
So, but however, for certain provinces, for example, Manitoba, BC, Yukon, Quebec, you can still claim those provincially. Federally, it's been eliminated.
So what's the maximum amount that one can get from CCB?
Okay, so CCB, the maximum amount you can get is $6,400 for children up to 6 years old. And then from 6 years old to 17 years old, you can get $5,400. But that's the absolutely maximum.
Depending on your income.
Exactly. So they do have a clawback based on your family income. So that's why the calculation could be different from year to year, depending on your family income. And that's also the reason why you need to file your taxes, so that the government knows how much to give you. There is a calculator online on the CRA's website that you can kind of gauge as to how much you would get based on your family situation, and then also depending on how many children you have. So what I would suggest is to go there and do the calculation for yourself to kind of gauge as to how much you're going to get. And the payments gets recalculated basically every summertime. It resets based on your that year's filing, your April filing.
Yeah. Okay. What about single parents? What do they need to know about filing their taxes?
Okay, so the biggest thing I would say between single parent versus dual for couple parents is the eligible dependent amount. So when you have a spouse, you usually claim the spousal amount, but when you're a single parent, you can claim your child, the eligible dependent amount. So I think the credits is equivalent. It just depends on whether you have a spouse, and if you don't have a spouse, you usually claim the eligible dependent amount. So the eligible dependent amount means that you have to be living with your child, and your child is dependent on you. Generally, they have to be under 18 for you to be able to claim that amount.
Okay, and you just claim it on your tax return.
Yes, exactly. But in TurboTax, we automatically calculate that for you. So make sure you enter in your dependent, so your child, and then you state that your child is related to you, whether they're your son or your daughter, whether they have any sort of income. It's possible that they have an income, so we will be able to calculate that for you.
That's good to know. All right, and what about childcare expenses? I know we mentioned that a little bit.
Okay, so yeah, childcare expenses, you can still claim that. So basically, you need to make sure you have the receipts and make sure that the purpose is for childcare, because you need to go to work or you have to go to school. So once those are some of the conditions around it. We do tell people that you should, if you have a spouse, that you guys should file jointly. So what that means is that we calculate and optimize the return for you. So there are rules surrounding who should be claiming the childcare expenses on which return, but we automatically calculate that for you as long as you're preparing your return together. I mean, at the end of the day, you're still filing individually. So, but we do calculate it together.
Is there a reason why? I mean, who would they prefer? Is it income or is it?
Yes, exactly. Okay. So it's usually claimed on the lower income spouse's return. There are exceptions. So that's why we say prepare it together so we can optimize it for you.
Okay. And for childcare expenses, we're not just talking about daycare, right?
So there are camps, camps. So as long as the purpose for that expense is to enable you to go to work or to go back to school. So those are main criteria. So if you are paying your babysitter so that you can, go out, for a date, that unfortunately doesn't count.
Okay. So camps are included.
Camps,
That's
yes,
really good
exactly.
And what about if you have your mom taking care of your kid and you're going to work? Or
okay. So if you're paying your mom to watch your child, then you can claim that as childcare expenses, but make sure your mom also reports that on her income return, on her tax return. So that otherwise, if audit happens, there could be, because they want to make sure that the amounts are matching, right?
Okay, great. We had a question from Josie. My computer died last summer and I lost all my software and files. Do I need access to the tax forms for 216 in order to do 217?
Oh, great question.
That is a great question.
That is great. So that happens to a lot of people, and especially if you're moving, for example, that happens all the time. So what I would suggest to those people is to sign up for My Account. Because your information is with the CRA. And if you sign up for My Account, you have access to all those numbers that you need. So even if you don't have your notice of assessment, it will be on there. So you do need some basic information for you to file, for you to actually access My Account. So for example, your social insurance number, your date of birth, and also if there's information on the website, on CRA's website, how to register. It's not, automatic. So you can have there's limited rate access at the beginning. So when you sign up, and then gives you access to your RSP information, things like that, and then they'll send you a slip with the little code, and then you have to enter that code in for you to get full access. And once you get full access, you'll have access to how much RSP contribution room you have, your TIFSA room, your tax-free savings account room, any capital gains, capital losses that you may have, your T-slips, things like that. So all your information from prior years will be there as well. So sign up for My Account. And then with My Account, you then also get access to Autofill. And then Autofill, basically, you can download all your information into your return, makes it really quick, really snappy.
It's surprisingly how many people don't know that actually all the forms are on my CRA account, right? And they can just easily access it.
Exactly.
It's pretty awesome.
I know. And I always forget, especially around this time, we're still RSP season. You still have a few days to contribute. I always forget how much room I have left for this year. And so for me, it's easy. I can, access it on my phone and see how much room. Oh, okay, I still have, X number of dollars I can contribute for my RSP. So
and T4s and T5s.
Exactly.
So pretty great. And Autofill My Return, which is awesome.
Yes.
What about summer camps? Oh, you mentioned that summer camps are deductible, right?
Exactly, as part of your childcare expenses.
Okay, awesome. And for medical expenses, if your baby has to stay in the hospital longer, what are some medical expenses that you can claim? What about diapers and wipes?
Okay, so diapers and wipes are not deductible. I really wish. They're so expensive. I feel like anything baby related, there's like a premium add-on.
It should be deductible.
I know, it should be. But no, unfortunately, it's not deductible. But anything medically related, then you can claim as a medical expense. So your hospital stay, any medication that you may need, so any treatments, like, any therapies, that, you can claim those.
Okay, great. Our next question. So, I think you kind of mentioned this, but I think it'd be great to get more information on it. How should spouses file their taxes?
Oh, okay. So we always encourage when spouses to prepare their taxes together, just because we optimize the return for the both of you and as a family unit. So that's why, because otherwise when you're filing separately, you have to enter in the transfer amounts, between spouses. There could be transfer amounts to make sure that, you're optimizing your return, but you're going to have to calculate that yourself. So,
it's difficult, right?
Exactly. It's difficult. So, it's easier if you just prepare it together and then you file it together, and then at the end we show you kind of a summary of of the both of you guys. Okay,
great. All right. And do you have any advice for mothers who start their own business while they're on mat leave?
Ooh, that's a very good one. Oh,
I don't know how you have the time to do it, but
I know some people, I'm just like in awe of them.
Yeah.
So if you are starting your own business during your maternity leave, there's a couple things to keep in mind. Obviously, if it's a new business, you know, there might be a lot of information, a lot of things that you can be deducting, especially if you're using your home as your office. So, you know, maybe part of your electricity bill, part of your property taxes, you know, anything related to your office is potentially deductible. So that's one thing. The other thing I wanted to also say is that your EI benefits, it gets calculated based on your income. So you may want to look into that when you're starting your own business as to how that may affect your EI.
So if you're starting to make income as a self-employed, then that you can't claim EI because you're getting income.
So that's why, like, you know, it really depends on the income threshold as well.
Okay.
So like, you know, there's a lot of rules around it. I don't want to completely rule it out, but it's something that you need to look into if you're going to be claiming EI. Of course, and then there's the other thing too, how much tax are you going to be owing at the end? So it makes kind of your situation, you know, kind of complicated. So you want to make sure that you save enough tax at the end so you're not stuck with a big tax bill and unable to pay for it.
Okay. So I have a question from Bonnie. I have a few rentals and have a desk area at my home. What are reasonable office expenses for my home office? And if I did claim this, will it affect my primary residence being capital gains free?
Oh, okay. So there's a couple really questions in there, really good questions, and something that we get a lot.
Yeah.
So like you said, reasonable is the key word here. So you know, if you only have a desk, you can't, you know, claim 100% of everything. You know, there's a very small space, so you may be able to claim, I don't know, it depends on how big your office is, I guess. You know, usually I tell people if your office is maybe, you know, 10% of your whole entire house, then you can claim 10% of the amounts of the expenses. So utilities, 10% of the electricity, if you have phones. So the key here is reasonable, and what's reasonable to you know, CRA basically at the end of the day, right?
Yeah.
So make sure you have all your bills, make sure you have all your backups. So that's one thing. And in terms of your principal residence, so if you're not claiming CCA on your rental, for example, let's say you're renting out a part of your house. If you're not claiming CCA, then it will not affect your principal residence exemption. Okay. So when you're finally selling your house, because you haven't claimed your CCA, then it can still be all exempt. And this is a great reminder. It started last year, in last year's filing. Now you have to actually, in your tax return, indicate that you sold your principal residence to CRA.
Yeah.
So it's a new requirement that came in 2016 for tax year 2016. Okay. So make sure that if you are selling your house and it's your principal residence, that you have to fill out that information on your tax return. I mean, it may or may not affect your gain. So if only part of the years are your principal residence, you may have a capital gain at the end. But generally, if it's been your principal residence for all the years that you've owned it, then there's no changes, no extra amount. It's just more of an information reporting that CRA requires.
But if you are self-employed and you are working from home, then you can claim expenses like internet, Wi-Fi, right, electricity.
So as long as it's not part of like the capital cost. So if you're like doing renovations, for example, you know, some people, you know, may want to deduct it, but you know, those have enduring effects. So meaning, for example, if I was knocking down a wall and changing something, you can't really claim those because that's structural, and that means it has enduring. So those is kind of considered CCA, the capital cost allowance. So you don't want to claim that.
But if it's an office, then I guess the office furniture, correct? Like any cleaning products that use there, like so it's like an office space, right?
Yes, exactly.
For that percent of the house. Okay, so you should be able to claim those.
Exactly.
That's good to know. Yeah. Okay, so for our next question, actually, speaking about self-employed, I know a lot of mommies are self-employed and working from home, so I'm sure that they probably have a lot of great questions. What tip do you have for self-employed?
So a lot of people ask me, what's deductible? Because I don't know what's deductible. And so the best way for you to find out what is deductible is actually to go in and do your taxes. use our software and go in and see what the categories of deductions could be. We kind of list them out. And also, I will also suggest that if this is your first year filing, if your tax return is, slightly different this year and it's maybe a little bit more complicated, or for example, having a new baby changes your tax situation. So for this year, maybe you would want to use our Smart Look.
That's true. Yeah.
So what Smart Look is you have basically you have access to one of our tax experts here, and then they'll look over your tax return for you.
So assistant review, we have a new SKU, assistant review, especially for mommies or new parents or people with a life-changing situation where they feel like there's a lot of new information, they're not sure what to do. It's a great feature because you have a tax expert available for you 24/7. And the smart feature is pretty awesome because you can actually see them. They can circle your screen, tell you where to put the right detail.
And
They actually give you.
They see their head.
Yeah.
That's
But
really
they don't
awesome.
see you. And then they give you tips on like extra credits and deductions and savings, which is really awesome. And they will review your return as well before you file. So it's really good if you have any doubt on doing it yourself.
And for me, I tell people, generally your tax situation doesn't change that much year over year. So what you should do is, for that 1 year that, is slightly different, having a new baby is different, or maybe you're moving, or maybe you're starting business.
Married.
Yeah. Those years are the years that you should be, having a review of your taxes. Because the following year, you'll be doing the same thing. So you have that as a base year. So you may not need that service for the next year. But what the best thing is, really go into our software, and if you get stuck, then go in and see, and then go and ask that review. Yeah, so you don't always have to have it. Yeah.
So we have a question from Iona. She's asking, I have 3 grown-up kids living with me. What can I claim?
Oh.
How old are your kids? Right? I think that's the first question.
I think that's really the key here.
Yeah.
And are they dependent on you because of medical reason?
Yeah.
Are maybe you should be charging them rent? Maybe,
If they're working.
If they're working. So it really depends on those factors. But I mean, your situation is unique, but there are a lot of other parents that are like that. They have
especially
boomerang
now,
kids. Is that what they call?
Yeah. I think now with the house pricing and in most of Canada, kids are staying longer.
Yes, going back to school.
Yeah. Okay, and I think we have one more question. Sorry, 1 second. I'm just looking for. So, is there a recommended TurboTax product for new parents?
I would say our most popular product, TurboTax Standard. Use that. So, if you still need help, like I said, use our Smart Look feature. Of course, we also have a community here, like, Answer Exchange, if you have just, minor questions, or we have our care agents as well that is available to you to ask questions, or ask me. I'm one of the people that answers the questions, so ask me.
Yeah, and you have an opportunity right now to send in as many questions as you want.
Exactly. Ooh, can we talk a little bit about this year's budget?
Oh, yes, please do.
Yes.
Let's do that before we wrap up.
Yeah.
Start wrapping up.
So the federal budget just came out yesterday, and there are a few nuggets for parents to kind of, it doesn't come in effect right away, but in the future. So
not for this tax year.
Not for this tax year.
For next tax year.
Yes, exactly.
Yes. Yeah.
So one of the biggest one is that the Canada Child Benefit is going to be indexed. So what that means, right now it's $6,400 per year for a child under 6, but that amount is going to slowly increase. It's going to be indexed. So that's great news.
Yeah.
Another one is the parental leave. They're adding an additional 5 weeks. 5 weeks for parental leave. Yes.
For parental leave.
Yes, exactly. So right now you have to share 35 weeks between you and your spouse.
Yeah.
So now you can share 40 weeks. So it's great.
So between you and your spouse.
Yes.
Oh, wow.
Yeah, so it's an additional 5 weeks. I know. But that's only coming in next year, June. So But that's something to keep in mind. That's an extra, an extra 5 weeks that you can be spending with your baby.
Yeah, that's pretty awesome.
Mm-hmm. Yeah,
or daddy.
Exactly.
Yeah.
So yeah, those are the two main things that I thought was really interesting from the budget.
That's
this
pretty
year.
awesome.
I know.
Thank you for that.
Mm-hmm. Yeah.
Thanks, Peky. And thank you for being with us today.
Oh, my
it was
pleasure.
A lot of fun. I think we learned a lot of new things. I know I did. So we'll be for sure filing our taxes soon.
Yes.
Thanks everyone for joining, and hopefully we'll see you soon in our next Facebook Live office hour.
Great. Bye, everybody.
Bye.